just over 2 weeks left in 2024. Hard to believe. And while many are thinking about what they're going to be spending before the year is up, financial experts say you should be thinking about saving.
Yes, we should be. On Your Side's Christine Lazar shows us some tips on how to do so. Christine.
It's not as fun as spending, but it is not too late to improve your finances for 2025. And I am joined by financial expert Lynn Richardson for some last-minute tips on how to have a better financial future for the new year. And I think a lot of people right away think of retirement savings. Is there anything we can do before the end of the year to maximize those?
Well, before the end of the year, you can put some money in your IRA. You can put some extra spending money that you weren't going to use for Christmas shopping. You can put that away. And you can also look at a self-employed 401k plan so that you can save money on taxes and save money as well.
Now, everybody's focused on spending, and you're not going to tell people don't spend this time of year because it's just going to happen.
Right.
But you say there's some ways to kind of spend more wisely.
Yeah. So I tell everybody, please do not spend your last dime in next month's rent on the holidays.
Right.
You know, get some self-control around it. And if you are living the way I've said in the past by the 10-10-30-50 budget, then you've got 30% of your cash that you have available for incidentals. So that's for groceries, gas, hair, nails, gifts. If it doesn't fit, get rid of it. And only use the cash so you will not be so you won't be tempted to use your credit cards and checks and things like that.
Yeah, and you have to be disciplined. And we were just talking about how so many Americans are now doing this buy now, pay later. And they think to themselves, oh, okay, my credit card bill, not this big this month, but now you have these other payments. So do you discourage people from using that at all?
I definitely discourage people from using buy now, pay later, any kind of thing that gets you into debt in the future, because you don't know what's coming up next. So preserve your cash, use what you have available, and then pray.
Well, what about boosting our bank accounts with tax deductions? You have a great list for those. Talk to me about that.
Oh my goodness. So you have to spend less money, you have to get more money, but then you have to get your money back. Getting your money back means if I spend this money, can I get it back? That's a tax deduction. So you want to consider hiring your kids to work in your home-based business. You can pay each child up to $13,200 a year, and that money is tax-free to your child, and it's a tax deduction for you. So if you were going to spend money on a laptop or, you know, some other kind of gift, or instead give them a salary so you can get the money back. Then let's talk about vacations. If you turn that vacation into a business trip, now the airfare, the hotel, and the meals are all tax deductibles. What about just having a meal? If you have a meal and you just go out to talk to your friend about anything, that's not a tax deduction. But if you have a business discussion, it is. So there are all these kinds of things that we're doing anyway. We're doing these things anyway, and we want to ask ourselves, if I spend this money, can I get it back?
But you have to be good with documenting, because if the tax man comes and you get audited, you have to be able to explain that.
Absolutely. So you want to keep very, very good records. You always want to document what your business expense was, who you were talking to, why you were talking to them, what you discussed, and everything around that conversation. If you take a business trip and you decide to do a photo shoot with your family. I do it every year when we go to Jamaica. We do a family photo shoot, and I use it in my business classes where I'm teaching about tax deductions. So you want to document everything. I tell people, do not tell a lie. Tell the truth, be honest, and get your money back.
And you mentioned in one of your deductions something about if you've been recently divorced. Talk about that.
So if you're recently divorced and you're getting any kind of alimony or maintenance income, you can use that money as a basis for a tax deduction. So you can still contribute to your IRA, you can still contribute and get those tax benefits even after you are divorced and receiving some kind of alimony or maintenance pay.
Well, you are always a wealth of knowledge, even when our bank account is getting kind of sparse. We love having you here. For more information on Lynn Richardson and her tips to save money, just check out our website at kcalnews.com and click on Seen on TV. Jamie, are you going to be saving at all before the end of the year?
Well, I'm cheap, Christine. I'm always
that
saving.
Is true. No,
I follow
thrifty.
leftover
money.
You are thrifty. You are not cheap.
Well,
you are thrifty.
Thank you. I appreciate that, Christine. Thank you. Great advice.